Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking metals and gold. Kind of a wacky, busy week for gold. We ended last week on the highs ahead of a very geopolitically high tension weekend, and we come in Monday and everything kind of falls apart. By midweek, we're down about $20 in gold. After that, we saw things really reverse, and gold not only reversed, eclipsing Friday's closing levels, but actually traded above 1,300 in the Dees bucket. It has done that before in this specific contract, but the front month gold that we watch has struggled to get above there. So we did trade above 1,300, so a big move, albeit we did pull back when some of the tension subsided late on Friday, and so we did see a pullback. But really, week over week, we settled unchanged, which to me suggests that the rally is still in place and the trend is still there, even though we did see that dip midweek that would have possibly seen things maybe turn over. And if you look at the dollar itself also had kind of an up and down week, although it ended the week on a high note. And that to me suggests that this is not just a dollar trade, not a Fed trade, when you see the dollar and gold rally hand in hand. So right now the dollar still looks pretty ugly on a chart. Certainly will help keep gold bid, but ultimately in the macro picture, what we saw this week, in the micro picture, I should say, we saw this week, gold and the dollar both moving in step together. Lastly, next week we have a big meeting out there in Jackson Hole, the Kansas City Fed Symposium, which will bring all global central bankers together. We'll get not only the heads of the big central banks in Asia, we'll get Mr. Draghi out of Europe, and we'll have Chair Yellen there as well, and both of them will speak on Friday. And I think that this will be a sort of a chance for them to test the waters. The ECB really wants to stop some of their asset purchases, and while the Fed wants to talk about how to strip away some of the assets from their balance sheet, this isn't the place to do that, although it is a place to test some of the language. And we could get that because Jackson Hole comes around every year, and it's one of the big talking points for global central bankers to kind of feel the reaction and how the market will push back if there is any resistance. So that we have next week. So that's a key part of next week. The data is light, so I think for this point that gold will probably go back to trading more closely against the dollar than with it. And likewise, if we do start to see the Fed talk about rates staying the same, maybe not raising rates and going more towards a balance sheet, that could help gold prices as well, because it'll certainly, the dollar may come off on that, and we may see gold bid. Likewise, the rising geopolitical risks aren't going away anytime soon. We saw that not only in Asia, but we're seeing that in Washington. We're seeing it over in Europe. So there's still a lot of tension out there, a lot of variables up in the air, and a lot of uncertainty, which bodes gold prices going higher. This is Todd Colvin coming to you from the floor of the CME Group.